Okay, I think we'll jump into it now. Welcome, everyone. My name is Bree from Agent IQ, and we're excited to have you join us today for this important discussion on the future of account holder service, particularly as we navigate the White House's push for change. With all these new regulations on the horizon, the way institutions engage with account holders is about to shift, and we want to really ensure that your institution is ready. We are absolutely thrilled to have John Clausen from MedInvention Partners with us today to really share his insights on these changes and how your institution can stay ahead. If there are any questions at all, feel free to pop it into the Q&A and we'll discuss them after the webinar. But without further ado, I'll pass it over to John to get us started. John?
John, you're still mute?
That was just a lovely way to start. Thanks, Bree, and thank you for giving me the opportunity to moderate this call. Thank you, everyone, for joining. I'm John Clausen. The bulk of my career has been spent in understanding value creation within the banking space. I started my career as a regulator for the New York Federal Reserve Bank, and from there on, I moved on and spent 20 plus years as an investor in banks. 3 years ago, my partners and I started MedInvention Partners. We have a venture capital fund where all of our investors are banks, and everything we invest in is bank tech that will help banks get more efficient and help them better service their customers. I've always been a staunch believer in that successful relationship banking married with operational efficiencies over time is the key to value creation for banks. And with that said, I'd like to go into a brief overview of what brings us together today. Recently, the White House announced a new initiative to improve consumer service across multiple industries, targeting issues that waste consumers' time and money. The focus is on cracking down on inefficient customer and member service practices, like automated chatbots that fail to resolve issues or keep consumers stuck in frustrating loops. Their initiatives aim to make it easier for consumers to interact with businesses, ensuring that they can reach human support when needed or receive efficient service through digital channels. It emphasizes the need for businesses to prioritize fast, reliable customer and member service, whether delivered through technology or human interaction. Why is the government getting involved? There's obviously been an increasing reliance on technology and customer service over the years that has led to widespread dissatisfaction among consumers, particularly when automated systems are poorly implemented. The government sees customer service as a consumer rights issue and is stepping in to hold businesses accountable for providing accessible, effective, and fair service. Their goal is to ensure that technological advancements like AI and automation don't create barriers for consumers, but instead enhance their overall experience. And with that backdrop, I'd like to introduce Slaven Bilek, CEO of Agent IQ. Slaven?
Thank you for the introduction, John. So as Jen mentioned, I am a CEO and co-founder of Agent IQ. Before Agent IQ, I spent 12 years at Google, leading various search and AI initiatives. And I have been working for many years deploying AI and automation solution technology to increase overall efficiency of systems. At Agent IQ, we are building a relationship digital service platform for banks, allowing them to take relationships which are at the core of all banking services and put them in digital space. We are doing it in a way that is scalable and efficient through clever use of AI and automation. And we do it in a way which is easy to deploy, does not really require AI resources and AI know-how from the banks, but provides efficiency and scale without exposing them to risk of compliance and regulatory concerns. And ultimately, I'm happy to chat here about how we're going about that and ultimately how banks can think about deploying automation, AI, and other efficiency tools while still keeping the customer at the center and getting the best of both worlds.
Fantastic. Why don't we get right into it, Slaven? Let me start with, given these new expectations, what can financial institutions do to stay ahead of these changes and ensure that they're meeting both regulatory standards and customer or member expectations?
Yeah, I think it's important to understand the spirit behind of these initiatives, from the government. They're ultimately aiming to protect the consumers, and consumers out there are frustrated with the experiences they're having nowadays. A lot of that is due to technology that has been deployed in a way which helps the institutions, but does not necessarily help the end consumers. So one thing that's very important, I would say, is to really consider how to put the customer experience at the center and start from there and use the technology to kind of enhance that and not necessarily inhibit that. And given that basic premise and kind of alignment, I do believe that regulatory constraints will be largely removed and non-existent likely.
Great. I think it's pretty apparent that more customers are choosing digital channels over face-to-face interactions these days. How do you think banks and credit unions can make sure that these digital experiences are as personal and satisfying as a visit to the branch?
Sure, that's a great question, and it is very clear that digital is preferred by consumers because in many cases it's more efficient, less effort from their perspective. It is much easier to open your mobile phone, finger swipe to get to your online banking app than it is to drive 15, 20 minutes to the branch. And that's why the customers choose it. What is important to keep in mind in that setting is that if you're in digital, that does not have to be completely a personal and self-service. There are ways to enhance that experience while providing services like what Agent IQ does, allowing that human touch to be accessible through digital services while still providing efficient and low effort way for the consumers to access the information they need, the help they need, and advice when something more complex is on the horizon.
Gotcha. Now, we've heard a lot about AI making things easier. That's until it doesn't. How can banks ensure that their tech is genuinely helpful and not just another hurdle for customers to jump over?
Sure. And I think the main part of the problem here is that AI is often evaluated by what's called deflection, or how well it keeps customers away from talking to humans, employees of the bank, be it agents, be it the bank tellers at the branch. And this metric naturally incentivizes AI to be more aggressive in keeping consumers from getting forward or getting in touch with a human. And the real adjustment that I would suggest to make is to not necessarily use this as one of the major metrics that is evaluated and appreciated, but really, again, focus on the consumer point of view. In this case, whether they're able to get their question answered or the advice they're seeking for, which with lower effort and higher satisfaction. So other metrics that could be used, again, is customer satisfaction or maybe time to resolution, which again, some similar metrics that can be deployed in the setting and ultimately give a much higher likelihood of better experience for the end customer while still capturing the benefit for the financial institution. It's also important to know that AI, regardless of how advanced it is, and obviously there's a lot of changes there, is never going to be, or it's still not, omnipowerful and has limitations on what it can do. And recognizing these limitations and encouraging different solution paths when limitations are reached is key also.
That's fantastic. I mean, I emphasize that I think that the way to create value in the banking space is through relationship banking, but combined with operational efficiencies. Now, we know that AI can streamline processes, but on the other side, how can it be used to build long-term customer loyalty and really build that relationship up? I mean, can AI play a role in creating those memorable experiences that keep a customer coming back?
Sure. And I definitely think that AI is part of the equation here, and ultimately the technology is going to keep getting better, and by all measures, the improvements are accelerating, so it's getting better faster. And that is to say that the banks that are not considering or not using AI are probably staying behind in some way. But the way it's deployed and can be used is really, it is possible to make it complementary to kind of core values of the bank, or kind of aspects of relationship with the customer, and not think of it as replacing that human touch relationships, and again, making it very impersonal and self-service, but augmenting that, human touch experience, because again, it's easier to get best of both worlds by combining the two, understanding, there's some limitations in agent, human-led service. Typically, that can lead to maybe a longer time to get to somebody, or queuing time. And in other cases with AI, we typically can get responses faster when they're correct, but then there's some subset of questions and issues that cannot be handled by AI. So the way we think about it, and ultimately, I think this is very much in line with the spirit of what White House and the government is pushing for, is using the AI in cases where it's helping customer, and provide that as, again, efficiency, scalability play. And in cases where it is getting in the way, to quickly move it out of the way and allow, again, for other more conventional ways of solving the problem to kick in.
Yeah, you mentioned focusing on task completion rather than just deflection. What metrics should banks be looking at to ensure that their AI isn't just working, but it's also enhancing customer experiences?
There are several metrics that can be considered. I think obviously customer satisfaction ultimately captures this. It is important to note, when you are measuring customer satisfaction, it should measure the whole journey, and not necessarily just interaction with a human, or just interaction with the AI, because from the customer perspective, it is typically combined, and they go through the whole journey to receive to the resolution that they're hoping for. The second one is time to resolution. Again, if customers can get to resolve their problem faster, they're typically happier. The little bit more nebulous metric would be effort that's needed to get to the resolution, meaning how many actions does the customer have to take to get a resolution. And obviously, fewer actions is better for them, because they don't necessarily want to spend as much effort as they want. And then last, and maybe not the least, whether is a first-time resolution, whether the problem was resolved in the first contact, as opposed to having to reach through different channels, and maybe start in digital but end up having to drive in a branch or call the call center. So all of these kind of measure experience from the customer perspective, and ultimately can lead the financial institution in a better direction when it comes to kind of optimizing the service.
Fantastic. Now, banks definitely want happy customers, but at the same time, they also want to keep that efficiency ratio trending on a downward slope. How can tech reduce expenses and improve the ability to service customers in the spirit that the regulators want here?
Sure. And I think both are possible, and ultimately, combining them is the kind of the holy grail here, because either side, technology alone and human service alone, will not necessarily do the trick, but combining them, you actually can get both of best worlds. And some examples of that, again, is focusing on technology as enabler, and completing easier, more mundane transaction from human perspective, answering repetitive questions and, FAQ types of things, and then allowing humans to focus on higher level value adds, kind of open-ended questions, things where advice, empathy is needed, things that require a longer processing time, be it because the decision has not been made from the point of perspective of the customer, or because they, they need some additional information that they cannot necessarily gather on their own. So I think combining these two really gives the best results, and thinking of AI as not a full replacement again, but really focusing on the areas where AI and automation, where it really adds efficiency without getting in the way.
Gotcha. I think it's important to give consumers, they know the question that they have and how they're interacting. I think it's important to give them a bit of the choice quickly on how they want to interact, and get how they think they can get to their answer fastest.
We have actually, seen this a lot when we deploy AI kind of self-service offering in our digital channels, in our platform. We encourage FIs to also have a easy, accessible escape hatch, as I would call it, which allows them to reach again human support. And what we see, customers in many cases can quickly tell, or they know upfront, whether their question is easy and can be answered through interactive self-service, or whether going directly to human makes more sense. And numbers are still fairly compelling. We see anywhere between 45 and 65% of people choosing self-service, or less kind of goes for the human help. The setup allows, again, for customers to make a decision, and ultimately they are much happier because they can use their knowledge and their kind of prior expectations to choose the path that suits them the best. And we've had multiple deployments of the service with very, very few complaints about this interaction, because ultimately the customers get what they want.
Gotcha. Now we all know that technology evolves fast, but so do customer expectations. How can financial institutions keep their AI and customer service tools up to date and in line with what customers really want?
Sure. So, one important thing to note here is, financial institutions really shouldn't be competing themselves with other financial institutions, because that's not what customers are comparing them with. They're comparing them with the experience with Amazon, Starbucks, and some other kind of front-leading companies, and to some extent, customers are getting more pampered, and they get a better treatment there and used to it, and they expect the treatment to be carried in other digital interaction they're doing, be it in the financial institutions or any other needs of their life. So what is important here in regards to a question about kind of AI advancements and how to keep track with that, I do think it is key that it's to start, right? Ultimately, there is a lot of changes happening, and there's a lot of possible uses of AI that can provide direct value to the institution without necessarily having to, again, introduce any regulatory compliance risk right now. And it is important to start. And when starting, rather than kind of maybe believing all the blog posts out there, it's important to understand that it's not necessarily very easy to build models and build know-how in-house and deploy it. So I do think it's important to work with vendors like Agent IQ that have a solid understanding of the use cases, have been working with banks and credit unions for 7-8 years now, and have a lot of experience in helping them reap value from AI, from automation, and providing success, increasing customer satisfaction, and working with them. And institutions, again, vendors like us, we can help bridge that knowledge gap. We can enable financial institutions to deploy systems which are ready for banking use cases, understand the customer journeys, and ultimately help make the experience much better.
Yeah, I think what you said there, I think it's super important for banks to partner with the right tech companies these days, and especially ones that know the limitations of AI within a regulated industry. What should banks be looking for in a tech partner to ensure they're not just buying into getting a sales pitch and buying into the hype, but they are getting real and lasting value?
Sure, and that's a great question, and it's not an easy one to answer, but ultimately, it is important to work with vendors that understand the capabilities of AI, of the technology, but also its limitations. And some of the limitations are not necessarily just generic in terms of what AI systems can do, but also are very related to how the banking systems operate, access to APIs, and again, appetite for risk and appetite for kind of providing automated solutions, end-to-end automated solutions without involving any human intervention. And these all can combine to really provide a very significant surface that can be attacked. So I do think it's important to identify vendors that understand the limitations, also the vendors that understand that AI and your deployment of AI will be evolving over time, so that allow you to kind of step in slowly, enter small, again, where your risk appetite is not stressed too much, but you're already seeing benefits. And then gradually, as the comfort with using the platform as kind of verification of ROI becomes clear, that you can gradually increase the visibility and usage of the platform to ultimately reap higher benefits. This typically is, again, from our experience with financial institutions, it is a process that takes months, if not years, and it's a gradual process. And I do think it's important to come into this with that mindset that you will not have all the answers from day one, and not everything will be as good as it might be after months and weeks and months of iteration and improvement. And it is important to find vendors that can provide you with a setup where you actually can, again, start small, iterate, and then kind of gradually increase the visibility and exposure to AI and automation, and ultimately, in that context, really balance out the risk of deploying AI with the benefit of deploying it. And we again believe we have found a very good balance there, and ultimately our current clients are can vouch of that, and we definitely have a lot of case studies that can show that.
Fantastic. So, I mean, it looks like we're headed into a new normal for expectations of customer service. For financial institutions, what strategies can you point to that'll keep them not just compliant, but in leading the charge in customer satisfaction and relationship building?
Sure. I think it's really important to go back to the basics, right? Again, when we talk to financial institutions, they often will tell us it's all about the relationships and trust that we develop with our customers. And typically, relationship building, trust building it's a longer process. It's not one-time thing, and it develops gradually, and it is about providing kind of a consistent experience to the customer and kind of gradually increasing their trust as the value is provided to them. Again, we believe that can be done through digital means, again, through our platform, as well, if not better, than it was possible before when customers were coming into a branch. But thinking of it as a journey where trust is built gradually and kind of accumulated over time, and focusing on gradual kind of improvement and gradual delivery of value gives the best results.
Fantastic. I think it's pretty important from a regulatory point of view to understand, and the regulators are never going to tell you exactly what they want, but I think for financial institutions, it's super important for them to keep innovating and changing, but and adopting AI tools in the right way, but making sure that they are doing it within the spirit of these new expectations for customer satisfaction. Super important to just keep innovating, but do it in a way that that you're confident that the regulators, when they come in, will be on board with what you're doing.
Sure, and that actually brings me to another important point that I did not highlight before. It is important to make all the interactions, with self-service and AI auditable, and leave that kind of trail of what has happened, and ultimately that helps both understand, what the benefit is, what potential friction points might be, and help improve the system over time, but also provide sufficient cover in one case of audit or some other regulatory kind of exercise where you need to provide logs of what has happened, and ultimately puts FIs in much better position when this happens.
Gotcha. You recently wrote an article of Balancing Bots and Humans, where you talked about the importance of giving customers an escape hatch from chatbots to real humans. What's the secret sauce of balancing the human touch and tech efficiency in your mind?
Yeah, and I think, it is clear that, chatbots, self-service do provide value. They can make for much quicker interactions in ever-increasing subset of use cases, and the benefit that they provide, can be reaped already today, again, with platforms like ours. Nonetheless, there still are cases, very salient cases, very common cases, where AI cannot provide kind of end-to-end resolution, and ultimately there's still need for human interaction. So balancing that, again, the way I think of it is really focusing from the customer point of view. If something can be completed end-to-end with AI, then that's a very valid use case where interaction can be completely led and handled by AI. But for other cases, which there are definitely many in banking sector, where human intervention is needed, it's really important to pivot and think of AI maybe helping collect data, validate data, but get out of the way as soon as possible, and really give way to the human to provide, the leadership and kind of ultimately complete the task at hand. Your customers will appreciate it, and ultimately your metrics will show it.
That's great. So when you think about banks and customer service, and them thinking about the future, how can they stay ahead of the game in customer service? How can they ensure that their approach isn't just reactive, but it's proactive and forward thinking?
Sure, and it's another great question. I think, as we all know, relationships are bi-directional, right? It cannot be always going in from one side to another, and it is important to have the ability to be proactive in communication and outreach with your customers. That traditionally was possible when they come in the branch, because you might be having a conversation with them, which is naturally a two-way thing. We have to some extent gotten away from it, from a digital perspective, which largely is a self-service, where bank does not necessarily proactively outreach to customer, with the exception of some marketing messages. I think once the relationship is move to digital space, again, which our platform provides that ability to do that, it is possible to also proactively reach out to your customers, follow up with them, after a visit with you, after they've resolved their issue, and especially if they were not able to resolve an issue in one session. And this ability to proactively outreach them is very much appreciated and ultimately emulates how we interact and reach in other aspects of our lives. So I do think it's important for FIs to consider of how their technology stack enables that, and ultimately how to make that as seamless and as efficient from end customer point of view.
That's fantastic. With that, let's open it up to questions from the viewers. Give a couple of seconds to see what comes in. How about this? So for people that are new to using this type of technology, what do you think is the best way to start integrating it into your existing process?
I think the best way really is to start with the problem that you're trying to solve, right? And AI is often referred to as one thing, but ultimately it is a collection of tools and solutions for many different problems. And in order to get best value from deploying AI, deploying automation in your system, it's important to start with a problem that you can solve and deploy a solution or technology in a way that it solves the problem, that also makes it more measurable, because ultimately you can validate that you are solving the problem without introducing additional hiccups in the system. And that gives you also the ability to kind of focus and start small, right? If you think of AI as a technology that needs to be deployed, then it's very hard to figure out what the attack surface might be, kind of what the best approach is, and ultimately makes it much harder to reap the value that you could be reaping. So definitely start with the problem.
Great. Here's a question. What processes should be prioritized to adapt to regulatory changes without increasing operational costs?
It's a great question. I think the key here is to leave kind of the audit trail in place, right? And I think and have that happen automatically. A lot of process overhead that we see, happening in branch, in call centers, and servicing customers is when employees have to manually collect some information or perform certain actions to kind of record of what is happening. To the extent that can be automated and streamlined, that again reduces the overhead for each individual interaction and ultimately helps focus on the problem rather than the process. Once the audit trail and stuff is in place, then typically it's reasonably easy to implement some batch processes to kind of validate that what's happening is exactly what should be happening, and increases efficiency overall.
Great. So when a company adopts Agent IQ's technology, I know you guys have had, and here's a plug for your Engage conference, where actual users all get together and discuss best practices. How are some of your customers optimizing staffing and resources for kind of like a hybrid model of technology and service, human service?
Sure. And key here is really to use technology to relieve the pain points, from the customer experience, while still, keeping the overall cost low enough, and ideally lower over time. Our platform has a lot of functionality built in that kind of helps make that more efficient. We have talked about AI and self-service to some extent. The other key kind of benefit of our platform is we are using asynchronous text-based communication as the primary mode of engagement interactions. And we see that that is typically much more efficient from the bank perspective for several reasons. First, one bank employee can have multiple threads going at the same time and can service multiple customers in parallel. This naturally reduces the perceived wait time from the customer perspective. We also have built-in push notification, allowing kind of customers to be notified when there's progress on their case, on their issue, so they don't have to do what we call active waiting, where they're on hold waiting for something to happen. They can continue their life. So typical interaction looks something like customer might send an inquiry, bank will reply, hey, we've received it, we are working on it. You can continue with your life, and we'll get you in 5 minutes, 30 minutes, whatever that might be, with a follow-up. And from the customer perspective, it's a much better experience because they don't have to wait, they don't have to pause everything else they're doing to wait for the answer. They can continue with their life, and ultimately, when the answer is available, they will get it. It will conveniently show up on their phone, and they can take it from there. This emulates, very much what we have seen happening in general with communication with our, friends and family. I suspect, many of us were making phone calls 15, 20 years ago, and when there was a primary mode of communication, but we have since switched to authenticated mobile messaging because it is just more efficient and a better way to communicate. So porting that into the banking world and really enabling it for financial institutions gets them to that much better way of communication. AI built in the platform gives them the scale and efficiency, and ultimately the relationship aspect, the ability to communicate with the same person over a longer time helps solve for that. So ultimately, all of these combine into technology providing a better solution that was available before, and ultimately a solution that will continue to improve as the technology evolves.
Great. We've got one last question here. From your existing customers, what do you typically see? Which department do they start with when they start to roll out your technology?
Sure. So most partners start with retail banking, and they can service that either with their in-branch employees or to some kind of fulfillment center or call center. So the platform being digital, one major benefit is that employees that work on the platform don't have to be collocated, but they can be. And again, there's some benefits there. The routing, assignment, follow-up is all being handled by the platform. So ultimately, the financial institution can decide how to best staff the platform and how to get the most value out of it. But I would say definitely retail banking is where most of them start. We have seen an uptake in the last year or so in deployments for small, medium business use cases. And these are typical use cases where their number of end customers is smaller, but the relationship are to some extent pre-existing and more sensitive because typically dealing with larger account balances. And what we have seen that again, multifaceted communication based initially on asynchronous authenticated messaging is really something that these customers appreciate because they are very busy and appreciate the ease of getting the answers or their issues resolved without having to spend a lot of their effort on it. Again, and this is all combining into higher satisfaction and higher ROI for the bank.
Awesome. Well, we're running up a little bit on time. Any final words of wisdom for the viewers?
Sure. I think it's really important not, to be afraid of the technology here. While obviously regulators are interested and they're trying to provide for best experience for end consumers, banks and credit unions, can reap the benefit of the technologies without putting themselves at the risk. And I do think it is important to start early or as early as possible and to start small. And by doing that, obviously the risk is significantly reduced and gives you benefit of experiencing the benefit of deploying technology and ultimately helps you set the path going forward. I don't think waiting on the sideline is necessarily the best way, because end consumers are expecting these solutions to improve and improve, fairly quickly. And starting is the best way to kind of start meeting their demands.
Fantastic. Well, thank you, Slobin, for your time, and thank you for letting me moderate this conversation. Really
Thank you.
appreciate it.
Appreciate it. Yep.
Thanks, everybody. Thanks for joining.